Hey, Dustin Tippett here, financial advisor with Jazz Wealth Managers. How you doing today? Hope you're having a good day out there. You might be looking at the stock market, and I'm focusing on it falling right now because I get excited when the stock market falls. It's time to do work. And in reality, we did work before the market fell, and so we're happy with the market falling. But let's say you're out there and you're like, I got to do something, right? Well, financial advisor's job, I stress about this, is to add value to clients every single day. Because otherwise, what am I good for, right? So that's like in my head. I know I've got to do it. Well, I want to share some stuff with you guys here today because maybe you're looking for ideas. Let's do 4 things, because I got 4 fingers, that you can do in a falling market. Don't just sit there. Don't get emotional. Number 1, tax loss harvesting. You ever heard of that? If you've heard of that, great, go do it. That's what you want to do. If you haven't heard of it, let's talk about this here for a second. This is tax loss harvesting. Let's say you've got a bunch of positions that have gains. You got a bunch of positions that have losses. Maybe those are NASDAQ stocks or something. Did you know half of the NASDAQ is actually down 50% or more? That's pretty nasty, so you likely have some losers in there. Now, you can't do this if you have an index fund. Sadly, that's the one downside to index funds that people don't often talk about, but they're not bad. I'm just saying you really can't do this if you have an index fund. So what tax loss harvesting is you say, I'm going to sell this one, this one, this one, and these losers, and I want the total amount to come up to $3,000 worth of a loss, which is your cap for a given year in the brokerage accounts as far as writing off capital losses. And you go, that's what I want to show on paper. But I don't actually want to lose the $3,000. I just want to show the IRS I lost $3,000. I actually want to take that cash and maybe go buy some of my other losers and average in. Maybe I want to go buy some dividend stocks, or consumer staple stocks are really hot right now. And maybe that's what I want to go do. Well, we know that your account and all those positions will grow at some point, but your statement will continue to show a loss of $3,000. When tax time comes, you go, I lost money, IRS. Here, this is what you do. Right? That's tax loss harvesting in a really simplified way. Now, you can't do this with an index fund because it's just one position. The index fund itself sort of gets those advantages. That's why we build our portfolios here with many small positions. That's ideally how you should do it. So it gives you this advantage. That's the first thing you want to do. The second thing you want to do, Roth conversions. You've heard it. You probably thought about it. You got pre-tax money, you got post-tax money, and you have Roth conversions. I should do it at some point. Well, now's the time. See, what's happened is your account was here at the end of last year, and this year, well, it's fallen. And that's going to happen from time to time, but could we show the IRS a smaller amount here and take that money, volunteer to pay tax on it while it's a smaller amount, and move it to the Roth? Because eventually it's going to grow again, but we won't be taxed over here. So if you had $50,000, now you've got $30,000, I don't know. What if we converted that, and then in the future it goes back up to $50,000, but we only pay tax on $30,000? You with me? That's pretty cool, right? That's what you should be looking at, right? Now, keep in mind, there's a couple different things you should look at. You should look at your income, of course. You don't want to volunteer to be in a higher tax bracket because you did a conversion, so work with somebody on that. That's a big one there. The third thing that you can do is simply speed up. I saw a thing the other day where Jim Cramer, and I don't have anything against the guy, I don't really follow him much, but Jim Cramer said, now's the time to have some cash to put into the market. Now's the time to free up some cash to put in the market. Was he not saying to time the market? Seemed like he was certainly saying take some from your profits and try to scale into this market because the timing is good. Okay, nothing wrong with that, but that's an idea, right? He was giving you an idea. He was essentially saying speed up. If you take profits from your winners, those are slowing down, and you put them into your losers or new positions that are discounted, that means you're speeding up your total portfolio. That's a really simplified way to say it, but now's the time to start thinking about speeding up, little by little. See, we dollar cost average in the market, and it just went straight up, and so we're paying higher and higher prices. That felt good because your value was going up. It should feel better to buy cheaper. Where else on the planet do you not want to buy cheaper? So think about speeding up your portfolio if you can handle it, and if you're have enough time until you need the money. If you're going to be retiring next year, God forbid, don't speed up, right? You get what I'm saying. The kids out there, you need to speed up. Why not? The fourth thing you can do, this is really silly, but don't search stock market crash online. Don't go to Google, YouTube here. Don't search stock market falling, crash, decline, recession, right? Because YouTube just wants to make you happy. Google just wants to make you happy. If you search for a 2022 Chevy Tahoe, well, it wants you to find that. And then it thinks you still want to see that. And so on YouTube, I'm thankful you probably found us because of that, but the more you type in a phrase, the more it's going to go, that's what they want to see. If we show them that, we can give them more ads. Well, the problem is if you search for that, and then YouTube does a great job of showing you what you want to see, eventually you think that's reality, right? You've seen it on the political side. You can search Democrat, Republican, this or that. All of a sudden they go, oh, show him a lot of that. And then you get really like convinced that everybody thinks that they want to be classified as a rattlesnake or something. And we're no longer men and women, we're rattlesnakes. That's not true, right? It's just what YouTube wanted to show you. You wanted to find it. So be careful there, because if you search stock market crash, decline, statistics, blah, 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 you're going to start to feel like this is over. You're going to see recession, the Great Reset, and all that stuff. It's just doing what it wants, so save yourself the emotion and change it up a little bit, right? Do like stock market recovery data. Search things like things you can do when the stock market falls. Maybe you'll find this video at some point again. But anyways, those are the 4 things. Tax loss harvesting, consider that. Doing Roth conversions if it makes sense. Speeding up your account if you're younger or have a longer time horizon. And for God's sakes, don't be searching negative things on YouTube or Google, because it's just going to want to show you negative things, and then you turn into a negative person, and, well, who likes them, right? I don't know. Hey, enjoy the rest of your day. I thank you for watching. I hope you have a chance to do something with this. If someone's not working with you and you want to work with somebody, I hope you'll consider, well, us at Jazz Wealth, we got new shirts, and so maybe that makes us look better, and you'll consider us. If not, well, we tried.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.